Hi, good morning, everybody. I'm Danelle from HRTorque. I'm part of the HR division. So just a little introduction for today's webinar. It is on insurance lessons from COVID, presented by Gary Watkins from Quattro. He's the current joint CEO and co-founder of Quattro Financing. And I would just like to hand over to Gary.
Thank you very, very much. Good morning, guys, and welcome. Thank you for joining us this morning. Today, I'm just going to share a little bit about what happened in COVID, some of the learnings that we've got out of it, also just some of the precautions that people need to take moving forward. So if you can please just go on to the next slide for me, Roxanne.
Gary, you're on mute.
Thank you. There was just a little video introduction to Quattro, the group, and its offering. And the Quattro Finance Group is a group of financial services companies. Each one of the companies has specialists in it who handle a different aspect of a financial service. So you end up with this specialist approach for each and every aspect of your life and financial need. We're not that generalist who professes to do everything, but actually does things poorly because there's far too much to know and understand in financial services for one individual to do. So in essence, you're dealing with a company, a group of specialists, not just an individual. We fit in between your accountant, your attorney, and your financial plan, and we bring all the aspects of legal, commercial, structure, accounting, and financial planning all into one umbrella. and we look at you holistically as a client. So a very robust financial services group offering. All right, what we're going to be discussing a little bit about today is just a tiny bit on COVID, but really the lessons that have been learned, some of the things that have happened during COVID and what to be careful of coming out of COVID. I think in the current environment that we were put into, we, as an insurance service provider, became an essential services company. Every single person literally ran. There was panic in the streets. People were trying to keep their jobs, move offices, go into remote environments, getting their insurance in place because there was panic and fear. People were worried about dying and being hospitalized, trying to get the medical aid structured correctly, getting the right life cover in place in case this pandemic came out of control. And us in financial services, we literally were run off our feet. It was the busiest 4 or 5 months that I've known in the last 24 years in financial services. And trying to deal not just with the workload, but also the fear, the anxiety, the desperation of people. It was a very, very emotional time for everyone, but in particular for us, because we see the statistics. We saw the retrenchments, we saw the dismissals, we saw the reductions in salaries, we saw people trying to stop repayments on their bonds and on their houses, on their vehicles. We saw people leaving pension funds and retirement funds. It was really, really a chaotic 5-month period. But we've seen the worst of it, and we're now coming out, and there's clear blue sky ahead of us. And now it's forging our way forwards into trying to get what we had back in place as fast as possible. When it came to strategy, particularly for business owners, what we saw is that businesses who had the right strategy and the right leadership in place were able to adapt to this new environment very, very quickly. And those are the people who really made it during this COVID pandemic. Those businesses who were very rigid in their structure, not willing to adapt, they're the people that took a hell of a lot of pain during that period. There were massive, massive opportunities open to the market. As one business closed, so there was an opportunity for new business to be formed, but massive opportunity. Diversification also became a very big part of business. How do we change our business strategy from what we were doing to what we need to do now? Sometimes businesses actually change their whole revenue stream. They went from producing alcohol to producing hand sanitizers, or manufacturing or sewing, started making PPE, masks, and things like that. We saw a massive shift in the market. Consolidation and future-proofing, again, also a massive strategy. Cutting the unnecessary fat. A lot of businesses were top-heavy in terms of staffing, just in terms of overhead expenses, and suddenly, faced with this pandemic, people started to realize, hold on, we don't actually need this. We don't need as much of that as what we had. We've got 3 people doing one job, we only need 2. And that consolidation definitely impacted on the bottom line for businesses and increased their ability to stay open, which then gave staff the ability to continue with a prospect of a career coming out of COVID. There were some massive changes that leaders had to make, and very, very important changes in order for that business to survive, which comes down to leadership. And leadership, if you look at the next slide, having trust of your team, your management team, your staff is such an important thing to have. If your staff and leadership team actually trust the CEOs and the MDs of the business and the decisions that they were faced with and had to make, and some of them were very, very, very hard decisions to make. I mean, dismissing or retrenching or putting staff on furlough and cutting salaries is a massive burden that business leaders were faced with and had to carry on their shoulders, and that those decisions are not made easily. But if the employees understand the greater picture and understand that this business has to survive in order for them to future prospects, and that maybe cutting the cloth for a few months is the only survival thing that you have to do. Leaders also had to stop panic. A lot of people were panicking, and business leaders had to just get the sanity to prevail and say, guys, listen, just hold on tight. It's going to be a rocky road, but we're going to get through this. Job security, maintaining culture in the business, and then also looking at the vision of the business and where's this business headed to? Is this vision something that we need to change, or are we still on the same trajectory? And is this going to be sustainable in the future? South Africa's always been exceptionally entrepreneurial. If you even just take our age-old saying of a boer maak 'n plan, you know, we're very, very entrepreneurial. We're always looking for opportunity. We're looking for that gap in the market. And those people who had this entrepreneurial spirit had a different perspective on things. And why I say that is that you can be faced with the same environment, the same challenges as somebody else, but it's how you view that makes such a difference. I'm just going to quickly share this slide here. You can see an adversity slide. This is New York City. When I was walking through New York City a year and a bit ago, it was smelly streets, traffic everywhere, garbage. I mean, it was a dirty, dirty, dirty city walking through it. And then when you go up onto these high-rise buildings and these wonderful rooftop bars and stuff, you get a completely different perspective of the skyline. You get a completely different perspective of Central Park. And I'd like to just share this little video with you so you can just get an idea on the other side of the opportunity that people can see. Where New York City's got these big skyscrapers and these bright lights, and you can see the Statue of Liberty in the background. And the reality is, both those pictures are the exact same city, but your perspective on the streets is just so different from what it is on the skyline. And this is where business people need to understand that their worldview differs. Those people who prospered during COVID had a different perspective to those people who failed. I was on a Facebook group in the restaurant hospitality industry, which was affected probably the most out of all the other industries. And I saw people putting hate speech up about the government and the lockdown, and this is wrong, and our industry is going to come to a close. And the reality is it won't. The restaurant and hospitality will survive. It's just the owners might change. That restaurant will close, but another operator will open it if that restaurateur doesn't run his business properly and hadn't had an emergency fund or a contingency plan in place. Some restaurant owners did exceptionally well during COVID. They diversified, they changed their menu offering, they became a takeaway, they did home deliveries all of a sudden, but they were able to adapt and just keep the doors open and survive. So guys, living in lockdown, what was life like for you? There was a movie years ago called Blast from the Past with Brendan Fraser. And in lockdown and coming out of lockdown, it reminded me so much of it. The story goes, there's an airplane that crashes, but this family have built this bomb shelter in case the World War III or whatever it was doomsday came. And when this plane crashed, the father decided, no, that this is the end of the world and there's going to be the next World War. So the whole family went down into this bunker, went and hid away for years, 30 odd years. And one day the kid eventually decides he's going out into the real world and actually sees life continued as normal, and that it wasn't the end of the world, it wasn't a world war. In fact, it was just a plane crashing. but these people survived in lockdown. Roxanne, if you can just click to the next slide for me.
What? What is it? The sky. Sky? Where? Up there. I don't see anything. Just look!
What is it?
He says he sees something.
What is it?
The sky!
I see it, Mommy.
I have never in my life seen anything like it before. Or like you.
So guys, yeah, that's pretty much what lockdown was like for some, you know. There was reports of dolphins swimming in Venice. There was skies and blue skies coming out of crowded cities with smog, birds singing in Wuhan. I mean, there was so much happening around the world where people started to experience what life actually would be like and coming out of lockdown. So on the insurance side, in all the different companies, there have been different experiences, and I'd like to just share some of them with you. Some of the practices that were adopted during lockdown are still continuing, and there are elements of risk that people just need to understand. So on the short-term insurance side, things like cybercrime and data security, the Protection of Personal Information Act, there's still a responsibility of a business. Now, a lot of businesses have sent their staff to work from home. And in that business, they've had all the security measures and stuff and protocols put in place to protect their data, information, and client data. And these are now at risk. Firewalls and stuff, unsecured networks and the likes. So in the home environment, you don't have the ability to have those types of protection mechanisms in place. Anonymous reporting, fraud and theft, another big thing. In the work environment, you're able to control your environment and your ecosystem. When people are working from home, it's a lot different. You don't know whether your staff are actually sitting at the desktop doing their work or if they shopping or doing other stuff. A lot of business owners say, don't worry about that. As long as the work's being done, I'm happy. But idle hands sometimes start to have some sort of ideas and ramifications. And this is where we've seen a lot of fraud and theft now starting to creep in. So just be mindful of those. Businesses reducing their cover. Again, on the short-term insurance side, you know, the businesses have literally closed their doors. They're trying to decrease their costs. So they reduce their short-term insurance cover. And this has caused a massive problem coming out of COVID because you can still have accidents, fire, all sorts of stuff happening in that business, theft, and suddenly there's no insurance in place or not enough insurance in place to cover those things. Another incident with business assurance is that you've got all your equipment and stuff and PCs, laptops, and all the likes all at one place, your premises of your business. Now all of a sudden the staff have taken all these things and moved home. So there's breakages along the way. Because they're on other locations, those assets are potentially not insured anymore because they were only insured at your premises. So it's things to be very careful of. Us as a short-term insurance brokerage also had to become an essential service provider. Another big thing we found as well is people started to realize, particularly in business interruption, when it came to claims, is how important it was to identify what your business expenses really are, what your real turnover is, and what amount of cover you actually needed to have in place for that over those periods. Some people also asked for premium holidays. This is where you don't pay your insurance premium for a while, but you're not insured whilst you're not paying the premium. And there's a claim event that happens and the business can't afford to recover those funds or can't afford to replace those assets or losses because of the underinsured amounts. Next slide, please, Roxanne. Another big thing is once those covers and stuff have been reduced and now people have gone back to work, a lot of businesses have forgotten to reinstate the cover back to what it needs to be. So we advocate that you review your short-term insurance portfolio almost immediately. Get it up to date now. Make sure your appropriate covers are in place and that you don't have any exposure. Look at your business interruption cover again, understand the wording, understand the time periods that you covered for. Just make sure you've got a better grasp on your insurance. Check for cover for public utilities, things like stormwater, water supply, electricity supply. You can have that on your short-term insurance policy. Another thing we noticed as well is domestic risk reduced to third-party fire and theft only. This is where people were not traveling, they were working from home and thought, I need to save some money on my short-term insurance. Let's not insure the car comprehensively. Let's rather downgrade the insurance just to cover if I crash into someone else, their car gets repaired, if my car burns, or if I have a theft. Now that you're back at work and potentially driving around a lot more, you need to make sure that your comprehensive cover is put back in place. We saw massive reduction in crime stats, people living at home, the restriction on movement, crime dropped drastically over that period, which was phenomenal. We saw businesses that were unoccupied. So the business was closed down because of lockdown. They weren't an essential services company. There was an increase in risk because it's unattended. People weren't aware of what's going on there, and there were thefts, fires, power interruptions where there were businesses that needed refrigeration and all those goods soiled. So again, just make sure you've got cover for those things. We've spoken about the movement of electronic equipment to remote locations. On the one side, potentially that equipment wasn't insured. On the flip side, it also potentially reduced the risk for your business because your equipment was spread out. It wasn't all in one area. The risk might have reduced for that business. And in saying that, a lot of businesses have now also adopted the approach of taking a self-insurance gap where they say, listen, for movable things like laptops and cell phones, we're not going to insure them. We rather reduce the premium and we'll self-insure. So yeah, those are options that you can take. On the medical aid side, we saw lots of people cancelling their medical aid savings. Those medical aid savings were really used for out of hospital. So those are things like GP visits, dentists, doctors, your medication, whatever it might be. That comes out of your savings. We saw people really consolidating and going towards hospital plans only and not worrying about the out-of-hospital expenses. And the main reason is that the people were not going to the dentist and weren't going to the doctor because they didn't want to put themselves at risk of being exposed to these conditions where COVID-19 may have been more prevalent. The schemes, we saw a lot of people also going from a very robust, good quality medical aid and downgrading it to a lower medical aid. Not a problem. Just make sure you've got gap cover that provides for the specialists and surgery where you've got a shortfall, where the private practitioners charge in excess of the medical aid rates. And then also for people on schemes is to understand that if they reduce their scheme, maybe they need to look at increasing it back again post-COVID. We saw some people that were wanting to cancel the medical aid or move, but couldn't because they were on chronic medication or had chronic diseases, and they just had to bite the bullet. But in all, we found most people held on to their medical aid because if you look at Maslow's hierarchy of needs, health, safety, security are really the foundation of people's needs. And this is something that you needed most in your life over this period was your medical aid. On the pension and provident fund side, a lot of businesses tried to get the expenses down again. And one of the places was being able to remove the pension savings from the pension fund and just retain the risk benefits. That's the life cover and the disability cover on the fund. and just put the savings, the pension savings, on hold, which obviously helped a hell of a lot. So we saw quite a few of those. On our funds that we have under management, only 2.1% of the pension funds were actually closed down over that period, which is really a great testimony to businesses who are able to continue with the employee benefits during the COVID period. And this is where the employees needed the cover the most. So hats off to those businesses. It's sad that we had lost the 2.1%, but we feared that the percentage would be a hell of a lot higher than what it actually was. We did see returns on investments impacted, and the short version of it is that the boutique managers, the guys that were asset managers and their job was purely asset management. In other words, they weren't an insurance company asset manager, they were just an asset manager on their own. They actually held their heads better than most of the general insurers' investment portfolios. We found that stock pickers actually prevailed, people who could identify the right stocks in the market. They were the ones who actually gave better returns over that period. The sad part that we saw is that we saw some of the funds having negative returns, and people were being forced to cash in their pension at a time when it was probably the worst time to actually cash in. Those people lost money. So we've always advocated to people, rather preserve your money, don't draw it. These times, it's not worth drawing it out, rather wait for the recovery and then access funds if you need it. We also saw a restructuring of fund benefits as well, where companies would reduce the risk benefits from 100% of salary down to 50% of salary. And this had a very bad impact on people's plans, and they didn't understand it. So a quick example, if I earned 100,000 Rand a month and I got disabled, I would get 75% of my salary, which was 75,000 per month. All of a sudden, the company, to avoid paying these additional costs, reduced the risk salary from 100,000 to 50,000. Now, if I get disabled, I only get 75% of 50,000, which would be 37,500 Rand a month. Now, something happens during COVID, I get disabled, I'm only getting 37,000 as opposed to the 75,000. I have got a massive financial problem. Those companies that have done that need to review those and get those risk salaries back to what they were. The consequences of people leaving their pension funds where they were desperate, they needed money, and they would literally go and cash in their entire pension fund. And they were taxed on the full amount, which was absolutely ludicrous. They didn't know that they could draw out what they needed and preserve the rest and not be taxed on the full amount. And this purely came to lack of financial advice. And we advocate that if you have a company or employees that are needing to withdraw, to advise them to get counsel, go and see a financial advisor and make the right decisions, because those consequences were dire. People have lost a significant amount of money just because of the taxation, and they've got the change left over now, which you are now losing compound interest on over time for retirement. And because of retirement age being 60 or 65, you now don't have the ability, because you don't have the time, to actually catch up. It just costs too much money to catch up what you have lost. So that was one of the very sad stories that we saw coming out during COVID. And this obviously ends up with being financially dependent on other people of your family, your children or your brothers or sisters or someone. People in your family now have to help subsidize your lifestyle when you're old and grey and retired. In general, on the insurance side, income protection was the most important thing for people during COVID. If you contracted COVID, you could actually claim on your income protection policy, where you earned a lot of money, if you had the appropriate cover in place with the right waiting periods. And this literally kept you from not losing your house, not losing your car, and still maintaining your lifestyle and affording food and stuff during COVID. So income protection claims were on the increase. Another big thing we saw during COVID was depression. People were going through massive depression. The depression rates increased dramatically, and those are income protection claim events as well. The horrible part was people who weren't adequately covered during or just before COVID tried to get cover in place in COVID, and the doctors were not allowed to do insurance medicals for quite a large duration of the COVID lockdown period. They were not deemed to be essential. And this was a tragedy because you got people desperate for cover, but no insurer was able to issue cover without doing a medical, and no doctor could do the medical. So these people were literally left stranded. As I said earlier about the withdrawals for retirement funds and unaware of the tax consequences and implications of it, there was a massive problem we saw. We saw people being forced into early retirement. They were desperate for money, their salaries had been cut, and they asked us to please retire them into their retirement annuities early, just to access funds. And this was the worst financial decision to make. But unfortunately, people didn't know how long this would last, and they were desperate. So they made desperate actions. Access to emergency funds was needed more than ever, and many people had never made provision for an emergency fund. An emergency fund really is 3 months of your salary set aside in case of an emergency. We saw a lot of people taking premium holidays on their life insurance and on their retirement savings, and they still have not put those back in place yet, and they've exposed themselves and their families to massive risk. So we urge you to revisit this and get that cover back in place as fast as possible, or at least some of it. Another thing we saw was with regards to retrenchments. We saw some people being retrenched. We saw some people being put into different positions. So this position became redundant, but we gave you a new job. Please understand that if you change occupation, you have to notify your insurance company on the change of occupation. If you don't and you get disabled, there's a chance you might not be covered for disability, because your disability is normally around your nominated own occupation. So it's something that you have to just bear in mind. If you were the CA before and now you are a sales consultant, or if you were the receptionist and now you're a PA, you need to notify the insurance company that your occupation has changed in order to keep your disability benefits in line with your occupation. The need for emergency funds, as I spoke about just now, it's literally 3 months of your salary set aside into an investment that you can access as and when you need it for unexpected events. If you don't have an emergency fund, I really advocate that you get one in place as fast as possible. It can be anything from fixing your car, personal expenses, right the way through to an emergency fund for your business, where if something happens in your business, like a COVID-19 lockdown, there's enough money to cover business overheads for a period of a month, 2 or 3. On the buy and sell side, this is for business owners who are in business with partners. We saw businesses changing in value, either increasing in value or decreasing in value, but significant changes in value during lockdown and COVID. And as a result, you now need to revisit your buy and sell agreements and make sure that the value of your business is actually the true value of your business. If your financing vehicle that you're using to purchase the shares is an insurance policy, in other words, you've got cover on your business partners' lives, you need to revalue those policies as well to make sure that they are in line with your valuation method of your agreement. Some businesses got new business partners. Some business partners exited the business during COVID, and other businesses got new partners on board. We saw some businesses merging. All of those buy and sell agreements need to be changed. Your memorandum of incorporation and your shareholders agreements must be changed. Your buy and sell agreement must be changed, and your insurance policies need to be changed as well. So just have a look at that. On the key person cover side, we saw a lot of people who have got key personnel in their business and they've insured them. Some of those key personnel have actually left the business during COVID. Some died or got disabled during COVID. The loss of those key individuals, you may need to reevaluate to see if there are any other key people. You may in COVID-19 also have identified people that are key in your business that you don't have cover on, and you need to make sure that you've got those covers put in place as a matter of urgency. We also saw own occupation of key individuals changing. So your key individual was the engineer and now has become a manager. You need to make sure that your occupational disability benefits of that key individual has been changed to that new key individual's occupation. You've got to make sure that that happens. Otherwise, your key individual may become disabled and the policy doesn't pay because the occupation's changed and the non-disclosure won't allow that insurer to pay out that benefit. Another thing to look at is business overhead expenses benefits on key individuals. This is where the key individual or business owner has become disabled or incapacitated for a period of time. And as a result of that, the business suffers a financial loss. Your business overhead expense benefit kicks in and it pays the monthly overhead expenses whilst this person is off work until they recover. And this just keeps the business out of any financial ruin. On the statutory side, just to make sure, again, like I spoke about on buy and sell, if you've got new business partners or if you've merged or if business partners have exited, please review your MOI, which is a memorandum of incorporation, and your shareholders agreements. Very important. Another thing to also address is during COVID, some businesses needed additional funding in order to survive it. And you might find one business partner had the finances to lend and the other one didn't. That partner that's lent the additional finances has been lent on a loan account. If that loan account is disproportionate between the shareholders, how are these funding requirements being dealt with in your shareholders agreement? Is that shareholder going to be getting a preferential interest rate? Are they going to be acquiring additional shares and that money goes into share capital? How are you dealing with these loans in these businesses? Something very important that you need to address. Another one that came to the fore, sureties. All of a sudden during COVID, sureties became a massive issue. I've signed a lease and I'm a restaurant owner and the lease has bound me to a personal surety. I haven't paid rent because you've been closed and the landlord now comes after me personally for my surety. As a business owner, what we advocate is understand your sureties that you have signed. Give them to us, let us read them for you. We'll explain in layman's terms what the risks are and we'll show you how to plan to mitigate the risks as far as possible when it comes to your sureties. From an accounting perspective, our accounting firm, we saw a massive increase in people wanting BI reporting, which is business intelligence. Basically, what it does is it takes information out of your accounts, out of your payroll, out of your time and attendance, out of machine efficiencies, whatever it is that you do, and it consolidates this information into a very concise dashboard where you as the business owner are able to identify risk areas and opportunities in your business by literally looking at a little rev counter dashboard on your screen. And it's become extremely important, particularly for people who now do work remotely, but still need a finger on the pulse to know exactly on a day-to-day live basis what's actually happening in their business. Also, from an accounting perspective, people came to understand exactly what their financial standing was in their business and where the efficiencies were, as well as where their problems were lying. And again, from an accounting perspective and offering a financial director service for businesses, we're able to intervene, help and strategize and get these things addressed and help these people put their businesses back on the map. So again, if your business is waning or you don't have a good understanding, guys, I urge you, get in touch with us. Let us have a look and see if we can give you some assistance there. Contingency planning obviously was also a massive part which we needed to get addressed. This was like lockdown, having these emergency funds. If we have to work remotely, how fast can we get our staff out the office, working remotely, connectivity issues, cybersecurity issues, addressing all of these things. You have to have a contingency plan for things like that. Now, it might not be COVID next. Your business might burn down. You know, what happens? How do you operate? Contingency planning is one of the most important aspects of your plan. Access to emergency fund, and again, Again, reductions of facilities is a big thing that we saw coming through. This is where businesses were suffering financially, and the banks would literally call in your facilities and say, listen, we've lent you 6 million overdraft facility. Based on the risks at the moment, we are now reducing your facility to 4 million. We'd like you, please, to give us back 2 million rand. All of a sudden, this is a massive cash flow implication for you and your business. And the banks have the full right to do it. People never thought they could do it. Banks never thought that they would have to do it. But we saw this happening over and over and over again. So guys, please, it's all around proper planning. I'm going to open the floor if there are any questions. You guys are most welcome. I'd like to thank you for listening. I don't know if there are any questions, but I'm more than happy to answer them if there are. The QR code that you see on your screen will take you through to our website. If you scan it with your camera on your phone, a little link will pop up. You can click on that. It takes you through to our website. You're most welcome to contact us there. Send any questions through if they're personal ones you'd like to discuss. Or you can just log on to the website, which is www.qfg.co.za. And you're welcome to give us a shout and we'll gladly help you. Thanks very much for listening. I hope you got a little bit of information out of today's webinar. Thank you very much to HRTorque for allowing us to speak this morning. We really appreciate it. And we look forward to seeing you guys on the next one soon. Thank you.